Hello, and welcome to Stoneridge Connect event. This is a short bite session on understanding posted groups in Dynamics BC or Business Central. I'm Deb Schaefer. I'm a team manager and senior solution architect on the Business Central team and work closely with Business Central and Dynamics GP. I have been in the Dynamics space for over 25 years. And I love to help our customers understand processes and dependencies and help them get off of spreadsheets. And I appreciate your time today. So today we're going to talk through what are posting groups in Business Central, how the master posting groups are different from the transaction posting groups, how we all put that together, and any questions that you might have. So there's 6 different posting groups that are typically used. So we have our customer posting groups, our general business posting groups, our general product posting groups. These are based on the chart of accounts. And we have our inventory posting groups and vendor posting groups. Now, you may not use all of these depending on what type of business you have. So if you don't use inventory, you may just have customer posting groups and vendor posting groups, and your transactions could be directly to a GL account. So we're going to go through each of these to help you have a better understanding of what this looks like. So when we talk about our customer posting groups, these are the posting groups that are assigned to the customers, and it's based on the customer card. Now, you don't have to populate those, but if you don't, then that means when you get to the transaction level, you will have to populate something in there so that you get a full transaction. So as with ERPs all over, you have to have a debit and credit entry for your posting of a transaction. So by setting a customer posting group, then that is going to default the transaction or to the transactions for you. The same is said for vendor posting groups and inventory posting groups. So the vendor posting groups, again, assigned to the vendor. This is going to give you that offset for your purchasing transactions, and it impacts accounts payable. Same as with a customer posting group where it drives the offset to a sales transaction, impacts your accounts receivable account. For inventory posting groups, these are assigned to the items, and it's going to drive the offset to that item transaction. So again, you always have to have that debit and credit entry to post a transaction from your subledger to land in the general ledger. Then we have the general business posting groups. Probably the easiest way to remember what a general business posting group is. It's the who that you are selling or buying from, and we're going to get into some examples of these. And then the general product posting groups are the what are you selling or buying. So first off, looking at our customer, vendor, and inventory posting groups, your master records use the posting groups from the balance sheet to drive that offset. So when we look at our customer posting group, we're identifying what is our accounts receivable account out of the balance sheet. When we look at our vendor posting groups, that's where we're looking at what's our AP account in your chart of accounts. And then, of course, inventory transactions, that's going to go into your inventory accounts. Again, all off the balance sheet. So this is that side of the entry that is always going to increase when you do a sales or a purchasing transaction. The income statement portion of your chart of accounts is how we're driving the general business posting groups and the general product posting groups. So when we look at a sales transaction, it's the combination of our general business posting group, which is the who you are selling to, and the general product posting group, which is the what you're selling. And that's going to define then what's the income account that you're going to use from your chart of accounts. So you may have sales of raw materials, as in the example above, or sales of finished goods. It's going to drive what that income account is. In addition, that combination of general business posting group and general product posting group are also going to drive what are your cost of sales accounts that should be impacted by the transactions. So I've included a screenshot here of the customer posting groups. I know these are small and I apologize for that, but I also know that you'll have access to this recording afterwards, and therefore you'll be able to come back and really look into these in detail. But the key thing to call out here in the customer posting group is you can identify those different customer posting groups for reporting purposes, but you can always drive to the same receivables account on those customer posting groups. So customer posting groups give you a way to identify a different set of customers, but still drive to that same AR account. Probably an easier example of that would be the vendor posting groups. And when you think about your vendor posting groups, you generally will have your vendor set up as something like a 1099 vendor, a non 1099 vendor. Maybe you've got employees in there because you're paying expenses. You may always want those to go to that same payables account, whatever that your base trade AP account is, roughly a 2,000 or a 20,000 account. But by identifying the different vendor posting groups, you have a way to report on those individual groups. If you're coming from Dynamics GP, it functions similarly to how classes. So when you assign a class to a vendor or to a customer, you're identifying the specific accounts that are going to be impacted when that customer or vendor has transactions. Then we have your inventory posting groups here, and this is where we're looking at the same type of functionality. So you're going to have your inventory posting groups that's going to be impacted on the offset. So where are these goods coming from when you're selling? So you're going to either add to your inventory if it's a purchase transaction, or you're going to decrease that inventory if it's a sales transaction. The offset to those are going to be your potentially cost of goods sold or other expense accounts. Then we get into our general business posting groups. And general business posting groups are a way to define then what's the different type of customers or vendors that you have. So in this case, we've got domestic, we've got European, and we've got export customers. We have our general product posting groups, and these are what are the different types of products that we're selling? How do we want to group these together? So we've got freight, and we've got materials, and we've got raw materials. We are going to have finished goods potentially, and we're going to have resources. And so these are the what that you're selling or buying. When we put those combinations together of the general business posting groups and the general product posting groups, so on that far left side, that's our general business posting groups. So we identified what types of customers or vendors these are, whether it was domestic or European or export. And then we have the general product posting groups. So the what are we selling? And so the combination of those then drives what is our sales account and what are all the related other accounts that are impacted in that transaction. So you're going to have your sales, your income account offset by your AR, but you're also potentially going to have your inventory account offset by your cost of goods sold. And so in looking at that general posting group, I've just scrolled over further. There are additional pages, or rather columns on this page. This also gets into the interim accounts. So interim accounts come into play when you're looking at what are the transactions that are the intermediaries. So you have a sales transaction that originates with a sales order. Then you have the shipment of that order if you're selling something, a physical thing. And then you're going to have your invoice process. So if you're using interim accounts, that means that in the shipping transaction, you want to have a GL transaction at that point. So using the interim accounts as defined here will create those shipping transactions. Same thing as on the purchasing side, you have a purchase order transaction that goes then to receivings, and then you're going to have your invoice from your vendor. That receiving is going to create, if you use the interim accounts, that transaction that shows the receipt of the inventory coming in. So we're going to get into some very specific transactions now. So this is a purchase transaction. It's showing you the line item that we're selling here. And when we go to look at the transaction for that, we can see what our cost line is and the GL accounts that are going to be impacted based on that transaction. When we post the purchase invoice for this, then we're going to see all of the accounts that are impacted. So the interim accounts would be reversed out, and you'll still be left with the correct transactions at the end of posting that transaction. For an inventory transaction, so if you do an item adjustment, you're going to see the accounts that are going to be impacted by this. And you can access this always in whether it's in a purchase transaction or sales transactions or an inventory transaction. If you click on the drop down for this post, it's going to give you the option to do a preview post or a test report, and you can see these transactions as you're working through them. For a sales transaction, we have a similar thing here. We've got our line items. When we run the preview post, we can see the transactions that are going to be created. And when we post that transaction, then those are the impacts you would expect to see. And again, the posting transactions. In addition to the posting groups that we talked through, so customer, vendor, item posting groups driving the offset for your sales, purchasing, and inventory transactions. There are additional posting groups for bank account posting. So this is where we're driving our GL accounts that are for the bank. So very similar to your other subledgers, whether you're using sales, or purchasing, or inventory, or manufacturing. When you have a bank transaction, you want to make sure that you're impacting the bank, not just the GL account related to that bank account. As with most ERP solutions, if you enter a general journal transaction to that cash account, you're not going to see that transaction in the bank transactions. You have to go in and do that bank transaction to the bank account so that it impacts both the bank and the cash account. There's also posting accounts to be driven for the tax setup, for projects, and for fixed assets. And I've included screenshots of all of those here as well. So you want to make sure that you have those setups in place so that your transactions are hitting the accounts that you expect. And as you're getting used to Business Central, or if you need a refresher, make sure that when you're looking at those transactions, you're running the preview post and you're understanding the GL accounts that are being impacted by those transactions. Thank you all very much for your time today. If you have any questions, please don't hesitate to reach out. I'm more than happy to answer questions on this or help you with anything else that you need if you're transitioning or you just have questions on how that posting flow is. Thank you so much. Have a great rest of your day.